So gold just reached almost $2,800 per. That is incredible. And despite what many people could say, gold is always a great business investment. And in today's video, I'm gonna go through all the data that is showing how strong could be gold for the moment forward. And the important thing is just to check the data and how the macroeconomic elements could. Just check this graphic. It reached the all-time high. And this is very important because when we see a lot of volatility with stocks, specifically with Nvidia falling 15% and then recovering, and then a lot of people just talking about the possibilities of DeepSeek exploding the economy of AI. No, we have seen how gold prices have risen in a straight line higher, even as volatility shook the Standard & Poor's 500. So I'm gonna compare these two elements that you can see here. Even though the US dollar hits a new 52-week high, imagine 52 weeks, the 10-year note yield broke 4.8%, gold surge. So these are two important elements for you to consider, because when you're thinking about diversifying your portfolio, you have to consider what is happening with the US dollar, what is happening to the 10-year note yield, and then how is that compared with gold. Now, historically speaking, I have to say that gold should be down sharply. That's when you analyze the data. But just check this graph made by Covey's later. The opposite is happening. Okay? Because gold prices double the Standard & Poor's year-to-date return so far. The key question is, will that keep happening? Or what macroeconomical factors could impact gold? Those are the key things that we should pay a lot of attention when we are analyzing data. Let's check this one. What we see, that in the last 12 months have been exceptionally strong for both. Two things, remember, the 10-year note yield and the US dollar. Remember, that's DXY. DXY. So that's what you can see there. 6.83% on the DXY, 2.21% on the TNX, and we can see the SPDR Gold Trust is 32.52%. So in this case, gold outperforms both the US dollar, okay, the pink one, the 10-year yield, okay, the purple one. And gold is the one that you can see in the top. So when a lot of people are just saying, no, you should never put your money in gold, I will say it, compare. Because that's the key element. It's like you have to compare elements to really understand, okay? I always recommend to have a diversified portfolio, to include commodities, include gold. And if you're interested in buying gold, actually, in the description of this video, there's the best information that you can acquire gold. But let's continue analyzing what is happening with the market, because I just like to go through all this data so you can go further. Now, let's analyze two things. One is the DXY currency index, like the dollar, and the other is gold price, okay? So this is a chart from 2016, because when you're analyzing investments, you also have to look back in history. What has happened and how different elements are combined or not. So what happens is that the US dollar, DXY, and gold, they typically move inversely. So check this. For example, in the period that it went from May 2016 to November to October 2016, gold price increased, and at the same time the DXY decreased. But then in the period of November 16, increased the DXY price and decreased gold. So it's like really inverse. So from a historic perspective, that's what has happened. Okay, so when people are analyzing when is good time to buy, a lot of people say, okay, let's just see how strong is the DXY. Because the stronger is the DXY, the US dollar, less strong is gold, and vice versa. But, okay, gold pricing in uncertainty, okay, because a stronger US dollar makes buying gold more expensive for foreign investors, correct? And gold is pricing in certainty. Okay, so this is very interesting, and this has happened a lot. So just consider that when you're analyzing and when you hear in the news, oh, the dollar is stronger, you will expect that the gold will go down. If they said the dollar is weakening, then you will expect that the gold price will go up. Okay, this is very, very important when you're analyzing data. Now, let's go to this graph. Let's compare these elements. So, in one side, China is dealing with deflation. China is deflation. The US is inflation, record deficit spending. Okay, this is very interesting. So, what happens is like when you have deficit spending, that drives bond yields higher because there is a need to issue more government bonds. It's like if the US government keeps just spending money, well, they need to issue more bonds, and therefore the yield that they're willing to pay is higher, correct? And therefore this increases inflation. But China is in a deflationary element, okay? But check this. So even with higher yields, gold is pricing in more inflation and deficit spending crisis. And that's the reason everyone is asking when the market is gonna crash again. Remember that, okay? You have in the 1980s the peak inflation, the Volcker shock. Then it's not very interesting here that you cannot see, for example, the crisis from the dot-com really affecting gold. You don't see it, okay? But China entered the World Trade Organization. China peaked, okay? And then the price of gold went down again. And from that point onwards, even with COVID and hedge against debt and deficits, the gold price is just increasing like crazy. Okay, so this is a very historical graph that you have to take into consideration, because it's like, okay, debt is increasing, inflation in the US is increasing, deflation in China is increasing, and the price of gold keeps increasing. It's very, very interesting, so you can analyze and think for your own investments. Now, let's go into this graphic, okay? So in Fed's meetings, which we will know in 2025 what will happen, the gold, it has a relative strength. The equity market volatility is pushing gold prices higher along with uncertainty rates. So that's very interesting. So it's like, in that way, it validates the argument that the volatility that the markets experience, it helps gold prices to move forward. Because, check this, the rising deficit spending keeps going no matter who's the president, and then gold becomes that safe haven trade. That's the interesting thing. That's the reason you should have in your portfolio. Oh, but Francisco, if you compare investing in Bitcoin versus gold, man, dude, I'm a firm believer of Bitcoin. I believe Bitcoin will reach $1 million, but I don't know when. But what if I'm wrong? That's the reason you have to have a diversified portfolio, so you can hedge against inflation. So the interesting things that we're seeing is that the volatility is driven an increase of prices in gold. And then with all these AI things, such as the DeepSeek, which I recommend you to watch the video that I made, it creates more volatility in the market. And then you have crypto. And we're going to talk about crypto and the comparison with gold, because a lot of people are always talking about the digital gold. So check this. This is some calculations from the tax foundation. Okay, these calculations were very interesting because they said that if 60% tariffs are imposed on China, 20% on everyone else, we will have an average tariff increase of 17.7%. That's it. Those are the key indicators. So each time you hear Trump saying, I'm gonna increase tariffs, like what happened with Colombian president. So let's talk about that, because what happened with Colombian president is very interesting to see how Trump will play his cards and how will that affect the price of gold, the price of stocks, the price of crypto, and therefore your investments. So Trump decided, so let's check the data. The data show that Obama deported more people than Trump won. Then Biden deported less people than Trump won. So now Trump 2, he wants to deport more people than Trump 1, and even getting to the levels of Obama. He's saying to the ICE, he's like, man, you just need to, each one, you need to deport at least 50 people per day. That's like a lot, man. Man, imagine if your work is just to find illegals 50 per day, crazy. And then Trump sent his airplanes, normal stuff, and then the president of Colombia makes the most terrible mistake that a president has made. He said, I'm rejected. Okay, everyone is like, okay. And then Trump was in Doral. He was just playing golf, and then he came back and said, oh, let's use Petro as an example. And then he just threatened Colombia to impose 25% on tariffs on Colombian products being imported to the US, which the biggest partner for Colombia exports is the US. Imagine. It's like $50 billion. It's like a lot of money, dudes. It's incredible. And of visas for government members, if he didn't do things right, he will increase the tariffs to 50%. So of course, everyone in Colombia panicked, like, dude, this is gonna destroy the economy, which is true. And Trump knows that because he knows that Colombia has zero leverage, like nothing. Petro said, the Colombian president, no, I'm gonna impose tariffs as well, dude. It's like, the Americans, they don't care. And when the finance minister of Canada, Freeland, resigned, before Justin Trudeau resigned, she said on her letter, and I covered in another video, that Canada should prepare for a tariff war with the US. So smart countries are preparing for tariff war, dumb presidents are downplaying Trump, and then what happened a couple of hours later, the president of Colombia, he had to say, please, 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 please forgive me. And he even said, I'm going to send the presidential airplane. And now it's a joke. But now Trump used the Colombian case to threaten, like a bully, like a big bully. That's Trump. Yeah, if you don't do what I do, your tariffs. And I'm always asking, guys, and tell me in the comments, what is your opinion? Colombia signed a free trade agreement between the Colombia and the US, which established the tariffs. And it took like 6 years of negotiation, 4 years of implementation, very long process. So in the US, as soon as a president comes, he just can change that. So I was reading, from a free trade agreement perspective, there should be real reasons to do that. But from American first perspective, yes, whatever the president wants to do. So it's like, dude, it's like I sign an agreement with you and you just wake angry with me, you're gonna change the rules? Dude. So this graph is very interesting because Trump may impose tariffs on Canada, impose tariffs on Mexico, impose tariffs on China. He will impose tariffs on Denmark, if Denmark doesn't give Greenland. Now he literally imposed tariffs on Taiwan. And everyone was asking, why is he doing that well? So what happens is that if he does this, the calculations of the tax foundation is that inflation will jump by 0.5%. Just look that. Okay, so it's like crazy, no? Just look tariffs, and then how it will just grow like crazy if Trump do what he does. Okay, then let's analyze this. Let's analyze the US money supply growth. It's 27-month high. Just check this, okay? It's just like they're keeping printing money. So this has driven all commodities higher and added more fuel to the inflationary fire. So if you increase the money supply, like dollars, you increase the price of commodities and therefore you increase the price of everything, therefore inflation. It's represented here, which is very, very interesting. And I have another graph to show you about that, which I just remember. Let me put it here, guys, for you, just for you, which was very interesting, just to prove the model. I know you can see it. Is the price of eggs in the US, okay? Just think about that. All-time high price of eggs. Man, I eat eggs almost every day. And my eggs prices just increased like crazy from one year to another, like almost 3 times more. That's terrible inflation. That's not good management of the country's economy, isn't it? You can talk a lot about American first, but if your eggs are much expensive because of your policies, well, your policies are not going very well. Is the data, dude. That's what I love, to analyze data. And if you don't agree, show me the data, guys. That's what I like about all these elements, and really to analyze things and to bring you these elements, guys. And so finally, let's analyze that in this graph. As you can see, 2024 marked the best year for gold since 2010. Now, as you can see here in this graph, inflation adjusted gold prices are now at levels now since the 1970s. We have to continue watching this as a leading indicator for macroeconomy. Very interesting. Very, very interesting. You want to buy gold? Well, think about all these elements. Put in the comments what is your opinion about buying gold. And the last one will be the ETFs. The gold ETFs, as you can see there, been for many years. And now the ETFs of Bitcoin, and then Ethereum, and then Solana. But gold is not gonna disappear, guys. It's very important for the global economy. Thank you very much.